Good evening, everyone, and welcome aboard. It is wonderful to have your company wherever you may be in God's green garden on this day, the 5th of September. Holy mackerel! 5 days into spring here in Australia, and I've got to say the weather is pretty fluky. One day rain and 14 degrees here as a top in Tasmania, and next day 20. In fact, in one day it was 2 degrees in the morning and 25 in the afternoon. Go figure. That's the way spring happens around these parts. We are going to, as usual, do our usual gab around the globe to see exactly what opportunities might be out there for the week. And we're going to start with the big picture stuff out of New Zealand, and then we're going to do some fundamentals out of Singapore. We'll go and have a look at some data then out of the UK. We'll have a look at gold and oil, going back to my neck of the woods, well, almost. I call it the Big Island in Sydney, Australia, where we'll talk, of course, to Ainslie. Then we'll go cryptoing, and that's in Malaysia. We'll go to the USA thereafter and talk about stocks. And then, of course, it's back to me here in Tasmania for my 2 cents worth, having a look at all things technical from a currency point of view. But first up, as always, let's have a look at the big picture stuff. And NFP on Friday, or it's not NFP anymore, it's NFP something or other. But I'm sure it'll take a long time to get NFP out.
It was rubbish anyway. It doesn't matter what they're calling it. You can rebrand it. That's a brilliant way. Classic American technique. Let's call it something different because it's not what we want it to be.
Well, indeed. And look, I think I've said that for 2 years. We all used to sit up. Well, that's not quite true, but in the early days, you used to sit up and go, gee, I wonder what the market's going to do. Can I get on this? Can I get in on this? Is it going to be a game changer? It's going to be a new trend, or it's going to reverse this trend? And it's just gone poof, hasn't it, really? In my opinion, anyway, for the last couple of years, if not 3 or 5. What happened?
It has, Geoff. Hey, so hi, everybody, and welcome to another episode of Are we trying to talk wader, or have we rebranded, Geoff?
Well, we have indeed. Sunday market update, I think we call it.
Sunday market update. Guys, I'm going to start with this, right? Everybody knows the unemployment figures. We all know that they were, well, let's just go with rubbish overall. Okay, non-farms was rubbish. Yeah, the unemployment rate came down, but non-farms are rubbish, right? Look, one thing I want to focus on, and you can pick this up on the web pretty much any way you want. This is the Citigroup Economic Surprise Index. So what does this mean? Well, there's a big black line in the middle of this. Let's be just say this big black line just here. That is 0. That means that the economists are getting it absolutely spot on, and there is nothing to see or say. When it is above the line, the economy is doing better, and it's surprising the economists in terms of its performance. When it is doing worse, as it is at the moment, then the economy is underperforming what the economists thought it was going to do. Now, there's many, many, many reasons for all of these things taking place. We all get that, right? But, and here's the but to all of this, right? What does it mean for us as traders? Well, one of the things that I think is important is that for the first time for quite some while, and I'm talking months and months and months here, we now have the global economic surprise index also being negative as well too, because the one on your screen here is just for the USA. So now not only do you have the USA trading poorly, you also have the global trading poorly against what the economists thought. Now you could argue, Julian, you would say to me, which is quite right, well, that's all COVID, isn't it? Maybe some of it is. But when you look at what's happening in China at the moment with some of their larger indebted companies that are looking like they're getting into trouble, when you look at the recovery that never happened in China, yeah, they bounced back, but then they stalled again. When you look at what's going on in Europe, they're doing better and they've got slightly better inflation, slightly better growth, but nobody's knocking it out the park there. You can quite easily construct a view which says that actually, I'm not sure it's doing as well as we think. And so that's really what's coming out here. Now, what impact does that have? Well, when economic figures start to perform poorly at some point in time, that will catch up with the individual companies which make up the stock market. So at some point in time, the micro will catch up with the macro. Now, what we don't know is whether the economic performance is a result of COVID or supply chain problems or this or that or 100 other things, right? But as soon as the companies start to report that they're struggling now and they're not doing as well as they thought they were going to do, then that's when earnings start to fall and you get into a trap on the equity market valuations. Because don't forget, equity market valuations, as we know, are a little stretched at the moment. And you could call them crazy or you could call them stretched, you call them whatever you want. But the reason why the market's been going up is because earnings have been going up around the world. In order to keep that ball rolling, we need to continue to have earnings to grow. Well, is that likely to take place? The economic surprise index is saying no. Okay, that's enough about economics. Now, let me put up some other stuff. I want to show you this. Okay, we've been talking about gold. Now, hopefully I'm not going to steal any of Ainslie's thunder when she comes on later. She normally tends to look at this a little bit more short term than I do. But I think for me, there's been starting to happen. For those of you who can see my cursor, this is the weekly chart of gold. Look at this support level here down at 1700 that we didn't break. Now the market is rally back. So the buy signal, if you like, there's a ring low formation for those of you who have done your homework, you know, on the weekly chart here. But equally, when we go look at a daily and you see the market trade above this level here, which is the low day, that's normally quite a bullish sign, right? It can be a sign of a reversal bar in this situation. So then you go, well, let's look at the overall picture here. And we'll go look at a monthly and we'll say, well, what does a monthly do to this chart pattern? Well, the monthly is still looking fairly positive. We've had the move since 2018 all the way up. We then had a ABC you can see in there, but we've had a retracement. And look at that month. I haven't seen a month like that for a very, very, very long time. Unless we take out this month's low, I am saying that gold is trading very well and should probably continue to trade higher. What other things do we have in our toolbox to help us out with that? Well, we can look at the cycles. There's some short-term, and you can see them here. Short-term cycles, medium-term cycles. Okay, look at the coincidence of both of them around this time. Also, remember that this time around here, okay, as we roll up into the end of this short-term up cycle, which hits at about the 24th of September, it starts to roll over. This is the seasonally bullish time for gold. But you've also got a longer term cycle that's bullish here as well too. So lots of reasons to be positive on gold. Hopefully I'm not stealing any of Ainslie's thunder, but I just wanted to point that out. We've been talking about gold now for the last 2 or 3 weeks. I'm just saying, let's continue to think about it, okay? What else, what other things do we need to look at the moment? This is right on my radar screen as well. For those of you that follow economics, you would know that the Australian dollar, when the commodity prices do very well, does normally very well. So what's been going on? Why has the Aussie dollar been falling? Well, there's the mystery. I think we can probably assume it's something to do with a small virus bug that's been affecting Australia. So as Australia has been hit by COVID, and I think this week they actually announced that it's got away from them and they can't go for an elimination strategy anymore. That's actually helped the Aussie. Why has it helped the Aussie? Because I think it means the economy is going to get back together again. So what does that do? Well, here's the thing, right? When you look at the Aussie, it's been trading quite poorly for some time, right? Not necessarily just due to COVID. Since pretty much March, it has been on a bit of a down leg, right? Then we can recognize this pattern because we've just seen it in gold. Now you've seen the market trade above the 73.70 area. We're into sort of, has the trend now ended and we're now going bullish? Well, here's the other thing to add into this from a fundamental. The Aussie trade surplus is enormous. Why is it enormous? Because they're not importing much because of COVID. It's just the basics. And what they're exporting right now is very expensive raw materials. So quite understandably, they have a huge balance of payment surplus, usually more than they usually have. That would normally put the Aussie dollar up somewhere near parity with the US dollar. Well, so here's the interesting thing. Why is it sitting in the 70s still? The answer is, don't know. But what we can do is we can look at this. You know those cycles I was just thinking about? Look at these cycles and where they're going. We're overdue for a pop on the cycle, right? You can see it up and then down, up and then down, and now maybe we're starting the next up. So if you think about it from a cycle perspective, you think about it from a fundamental perspective, and now you've got the technical chart pattern calling it as well too. Where are we wrong? Where we are wrong if we take out this low down here. Is it a risk worth taking because it's almost 2.5 big figures? Well, that's crazy, you say to me. Julian, I don't do 2.5 big figures. I need much smaller than that. So don't then. Take a small amount of risk. Get into the dailies. What are the dailies saying to us? Right, let's look at the dailies and say, where are we wrong on the dailies? Well, we have to wait for some kind of retracement because at the moment we're like 8 or 9 days straight up. So if you're a daily trader, you've got to wait. I think the trend here we can see, look, big move down, blew out all the stops, next move back up again, back inside the trading range, blew out the top of it. There's lots of bullish signals here. So wait for your first retracement on the dailies and then trade off the dailies. If you're a longer term investor, look at the weekly charts. You've got a 2 big figure stop, but if this thing works out, it's going to 85, which is 12 away, right? 12 cents away, miles. This is a 6 or 7 bagger if it goes where we think it might end up going. We need much more supporting evidence to get there, but just hold that thought in your head. I'm not as bullish on the European currencies, anywhere near as bullish on the European currencies as I sit now with the Australian and the Kiwi dollar. So these are the things I'm thinking about at the moment and the areas I'm looking at. Hopefully that gives you a flavor with that fundamental bias and maybe a little bit of cyclical bias to have a think about what's going on. I'm sure the guys will maybe help out with the shorter term view, but this is where I see the longer term pattern. Geoff, back to you.
Cheers, Julian. One question. I always ask you one question. Aussie Kiwi, struggling to get above recent highs, I'll put it that way, off a retracement. What's your forecast?
So look, super long term for me. The Kiwi sells protein and the Australian dollar sells raw materials. Protein will always win out in a growing middle class around the world. So the short answer to this, Geoff, for me is that in the very long term, I see the Aussie and the Kiwi trading at parity. However, that's a super long-term view that is based on a sort of, if you like, some fundamentals that could take years to unfold. In the meantime, what are we actually doing? Well, let's go look at the monthly charts to try and get a feel for it. The short answer is not a lot. I'm trying to get excited here, Geoff, but I just can't. I understand the last 2 months have been pretty negative for the Aussie and positive for the Kiwi, and that's why we're heading down towards the low 103s, 104s at the moment. Traditionally, it seems to sit at about 110 is the midpoint, or 108 to 109 is the midpoint of all of this, right? Vaguely looking at that, maybe a little lower, I'm not sure. 107, call it as the midpoint, right? So at the bottom end of the range. Has it spiked to give me the idea it's going to trade up? No, it hasn't. Is it still trading down on the monthly charts? Yeah, I don't think I'd be looking to do anything at the moment because you've had 2 months down where it's closed in the bottom 5%, 10% of the range both months. And all that we've done this month is retrace up 50%, and we've maybe got a little bit more room to go, but it's not exactly bullish. This just seems to be a retracement on the monthlies to me. So the short answer for me is I'm not sure where this is going. In the long term, I expect this to break out to the downside and go down to 95 cents at least. And then it'll have a moment. It'll have a moment and everybody will go, that's completely mad. And then you'll see it bounce back to the 110 again, and then it'll go into some kind of cycle again, right? But
parity in 110 seems to be the best range, I would say.
Honestly, if you looked at this and you asked me what I'd be doing right now from a trading perspective, I'd be selling options at either end of the trading range and just trying to collect premium, as I would have done for the last the last 5, 6, 7 years. You could have been one of the most profitable traders in Asia if you just sat there with that options trading strategy. So I hope that helps, Geoff. I hope that helps everybody understand this. This hasn't been going very far, and maybe it's time for a turn, but I think still unbelievably we're heading down, which I'm with trepidation. I'm saying it. I don't understand why.
It's like a great range trade to me when it gets there. Anyway, thanks, mate. Much appreciated. Enjoy the rest of what's left of Sunday. Father's Day. I forgot to wish you happy Father's Day, mate.
Thank you. Well, I'm back at you, mate. And it's one of those special times, and it's a shame that you maybe had a little bit more freedom than us. We're in the middle of lockdown, a level 4 lockdown, which means I can talk to my children. I can't talk to anybody else, and I can't really leave the house. So it's been a very, very quiet Father's Day. But my kids made me a beautiful dinner today with my steak. I hasten to add, my steak and my wine. But they made me a beautiful dinner today, so the thought was lovely. But they didn't help me dig the holes I've got to dig in my garden to put my fence posts in. So I was still doing that this morning. So much of Father's Day help that you'd expect from the children. Anyway, it was a lovely experience, and it was great fun having the whole family together. So thank you. And to anybody who's got fathers out there, if you're part of this, then I hope that you've had an amazing day as well too. It's one of my favourite days of the year.
Was it 9-score Black Angus or?
It's a really good question. It was, seriously, it was an amazing piece of meat. I think I got it off a butcher. It actually came out the freezer, so it's unusual to get it so nicely out when you defrost it. But we actually froze it really, really quickly when we got it off the animal, off the carcass. It came very quickly from the house, from the butchering house. I don't know what they call them these days. Anyway, so we managed to get it. It was amazing, I have to say. And my son didn't even have to marinate it either. He was talking about marinating it 2 days ago. But again, that's, for a 21-year-old, that's a little bit of forethought that sometimes is beyond them. But
you can't marinate a good cut anyway. Good cuts.
Beautiful nonetheless.
Pure. Absolutely. Mate, I better let you go, and we better talk some more trading, I suppose. Much appreciated. Cool. See you later.
No worries. Thanks, guys. Thanks, everybody.